I'm Steve Forbes, and you're watching Traders Nation.
Welcome back. You are tuned in to Traders Nation. My pleasure to have back with us once again Raghee Horner. All right, futures and trading expert over there at Simpler Trading. Raghee, welcome back to Traders Nation. How are you today?
Thanks for having me back. It's great to be here. It's an excellent day.
It is an excellent day, isn't it? Hey, oil prices are on the rise, even though OPEC has agreed to hiking output. What's going on there, Raghee?
It's a really interesting narrative because what happens before these meetings is OPEC will start to signal the market what they may do, and probably going out about 2 weeks when we saw crude oil start to sell off, the market was preparing for an increase in output of 300 to 600,000 barrels, and you could see the way crude kind of topped out and then started moving lower. Yeah. So once we got the actual news, this was very much a sell the rumor, buy the news kind of reaction. Sure. So I've been looking for this rip higher after the meeting.
Right. OPEC has they got this tightrope that they really got to walk on, don't they? Between what the expected production increase while communicating maybe even a different message when it comes to that. How are they going to get through all that?
Well, the message they're communicating is basically twofold, right? They've got to basically satisfy a lot of energy ministers from countries like India and China, who are their biggest consumers going forward. Those are their biggest clients going forward. And India has been pretty vocal about the fact that they're tired of paying prices as high as they've been. So OPEC's going to put on a show, especially when it comes to the Saudis. They're going to put on a show, and they're going to communicate to the world and to these specific energy ministers, hey, we're here for you. We're going to do what we can. We'll increase output. Sure. But on the flip side, they know they want to take that road show for Aramco back on the road next year. Sure. And if crude oil is not above 72, they're in big trouble.
Oh, big trouble. So you mentioned just a moment ago 600 barrels that's going to be going out to the market per day. Is this enough to meet demand on the demand side at all?
Well, at this point, we're seeing mixed pictures on demand. OPEC is always going to have a much higher estimation of what demand will be, but if you look at IEA and EIA numbers, they've actually been lower for 2019. So this idea of demand might be a little bit of a fiction, but it only matters what the market thinks is real. Even the Venezuela story is probably decreasingly unimportant. It's just really unimportant at this point because their output is decreasing, and that means that there's less oil hitting the market from Venezuela anyway. So a lot of these narratives really don't impact the bottom line.
Yeah, well, even the U.S., our production output should make up some of that demand anyways, if it's there, right? I mean, we've been putting our output's been greater than we've seen in recent years.
You bring up a great point, and that's exactly true. And that's where I think there's some opportunity for investors and traders, because the only bottleneck right now is literally a bottleneck. We can't get the crude out into the marketplace fast enough. I mean, our shale output is phenomenal, but transport's a problem. Trucking has been benefiting. Railroads have been benefiting. If you take a look at the Oil Explorer ETFs, they've been benefiting. And that's where I think traders and investors can jump in on the ride and take advantage of that. But remember, if we're going to end up with that 25% tariff from China, I don't think that's going to happen. Right. But if we end up with that, then, of course, the shale becomes completely uncompetitive out in the world marketplace. Yeah. So there's an interesting, like you said, it's very much a tightrope. But I think there's opportunity for investors, and that is who has to actually get the cash infusion to expand and grow the infrastructure here in the U.S., and that's those ETFs like the XOP.
Well, I think you're onto something there, because let's face it, in fact, I know you are. All the supporting trucking, refineries, all these supporting industries that surround themselves around that oil, great plays there, right?
Absolutely. And I think a lot of times if futures traders would think about the dominoes falling into the equity space, and equity players would look at where the dominoes are falling from the future space, they could see that the result is, hey, there's opportunity in, say, small cap energy. There's opportunities in ETFs like OIH, XOP, XLE, and they can try to play it with where the money's going to flow in an effort to get this shale out of the U.S. and to these countries that want it.
Yeah, I mean, we're looking at drilling companies. All these companies are coming to mind that support this industry. Certainly, refineries. I scratch my head all the time on this. We don't have enough refineries. I just don't understand why we're not building more refineries. Certainly, that's got to be a conscious decision not to do that. But why don't we see more refineries out there to process some of this crude oil?
Well, I think that can go back to what was happening in the previous years, where the shale output per well and the current price of crude, that oil-to-debt ratio just didn't justify the banks basically opening up more credit to these companies. And so now that the oil-debt ratio is very nice, and the wells on a per-well basis are now basically profitable, even just around $40, even below $40, with crude sitting at $68.50 right now. And even before that, crude oil sitting between 60 and 70. We had the biannual review just a couple months ago. So we're finally seeing some of that money flow. The U.S. is building a refinery, but, these things cost $1 billion with a few dollars. So we needed the money.
And now I hope we have it. I'm hoping, right? And we'll see. We'll be able to forecast on the horizon that it's going to be used and continue to be used. Hey, before we run out of time, I want to talk about the potential 25% tariff in regards to the Chinese and the potential looming trade wars that may come down the pipe. Is that going to affect oil production or oil output, for that matter?
Well, China is obviously, they buy a lot of that crude oil that we put out right now. I can't imagine we won't find other buyers. India comes to mind. I don't think they have quite the appetite China does. But when we talk about tariffs, of course, crude oil is going to be affected. We're already seeing how soybeans are reacting to these potential tariffs. So I think ultimately the way we see the ramp up with the way that we're negotiating, if you want to call it that, these different agreements, whether it be NAFTA, whether it be with China, I think it's going to get ugly on the surface, and then all of a sudden everybody's best friends. We're just waiting for when that transition is going to happen, and it's got to happen. It's best for both countries. They're going to come to the table. But in the meanwhile, I think we're seeing where there might be some very interesting buying opportunities. The Dow's been hit hard. I tell people to have a wish list, right? Have a wish list for when these kind of narratives put your names that you'd like to be in longer term on sale. So I encourage everybody to be opportunistic here and be realistic about good names, but at great prices.
Right. Now, if to find a wish list, certainly to put one together, what would be a great way for some of these folks to take a look to see what would potentially they would want to have on their wish list? Any good ideas there that folks can start gathering great names, tickers to start that wish list that you're talking about?
Sure. So you want to go to first where the market's been sort of battered. Let's start with the Dow. That's been probably battered the most when you think of Russell, S&P, NASDAQ, and Dow. So I would start with the Dow. Then I would start to look at names that additionally have been hit hard because of the tariff narrative. So Boeing, Deere, Caterpillar, these names have been hit pretty hard. And then I would start to build a list together. Like, for example, Home Depot has been fine, right? So you can actually look at the relative performance leaders like Home Depot and say, look, once the market's ready to rally, I can already be long Home Depot or UNH because they've been strong. I would avoid the financials, but I would look at, say, Caterpillar, Deere, Boeing, names like that.
Builders, and let me tell you something too, because I've been out there on the road, and this is no benchmark, okay? But I'm really excited I'm seeing a lot of building going on. I'm seeing apartments going up. I'm seeing housing communities being rebuilt out there. And it's not only here, but I've been out of the state of Arizona. I'm in Arizona, been in Nevada, and I'm seeing it everywhere I go, and I'm loving seeing it. All right, we're out of time here today, Raghee. Where can we find you at? Where can we find you? What's the website?
Sure. You can find me at simplertrading.com.
All right. Simplertrading.com. Raghee Horner is with us here today. Futures and trading expert. Always a pleasure. Thanks for being with us.
Thank you.
You bet. We'll be right back. Stay tuned.